Okay, after that quick overview of the sheet, let's dive in a little deeper again. So we go to our client sheet, or rather our client folder, and you see the standard folders that we have. One of them is evidence. Inside evidence is the income folder, and that's where we have our spreadsheet. We open it up. And we see the receiving table, the one that takes raw data from the other pages. Let's look at those other pages. This is one of the pages that we enter raw data into. There's one for the debtor, there's one for the co-debtor, so that we can enter in information from the paychecks or from the bank statements of each of them. There's another one here called Gap Calculator. We use this one a lot, and this video is going to focus on using the gap calculator. If you have your client's pay stubs, that's generally the easiest way to do the 6-month calculation. Of course, some clients have income that's harder to pin down. Maybe they work for themselves, maybe they get paid cash, or maybe they didn't keep a very good record of their pay stubs. So sometimes we don't have the easy way, but generally if we have the pay stubs, this is the way we do it. Let's go back and look at this table here just to get an understanding of some of the ways that this table is laid out. One of the things to be aware of, you'll sometimes see that there's a gap between one column and the next, or one row and the next. For example, here we've got row 11, and suddenly it jumps to row 156. That's because there are hidden columns that Excel can tuck away until you need them. And the way to reveal them is to select the row that's on either side of a gap, right-click in the margin, and the right-click menu pops up. You can see that it has a hide and an unhide option. In this case, we're going to unhide, and it unfurls all the hidden rows that were tucked away. If you want to reverse it, of course, you can do the right-click menu and pick hide, or you can always hit Control-Z, and that undoes the last action. Something similar is on the columns. There's a couple places where there's a gap. Here there's a gap between A and D, and here there's a gap between E and M. Works the same way. You select the column that's on either side of the gap, and you unhide. Control-Z to rehide. Another sign that there's a gap, of course, other than the jump from one letter to one that's farther down the line, is this double little line you see here. That's another indication that there's hidden columns, or down here that there's hidden rows. So let's look at the gap calculator. With the gap calculator, you'll notice that there are these 4 sections, but only one of them has these cells that you see here. But in fact, the others have the same cells, they're just hidden. They're tucked away because oftentimes we don't need them. If you have more than one paycheck, sometimes both debtors have paychecks, or sometimes one debtor has 2 jobs, you can unfurl one of the other sections and use the same setup to do a gap calculation. And here's how gap calculation works. You can see check 2 and check 1. Check 2 is the last check in a 6-month period. And we fill in the year-to-date for the various categories of income and then deductions. Check 1 is at the beginning of the 6-month period. And it's important to make the point here that it's not actually the first paycheck in the 6-month period. It's the paycheck that's immediately before the first check in the 6-month period. It might be easier to look at the sample checks that we're going to use for this particular video. We're going to calculate from February through July. And so we're going to start with the second check, which will be the last check in the period. Let's try to find it here. It'll be the last check in July. So we're going to take the year-to-date from the last check of the 6-month period. We're going to write it into the column, and we're going to then deduct at the other end of the period the paycheck that is immediately before the first paycheck of the 6-month period. The first paycheck would actually be the first one in February. And in this case, that's the paycheck for February 10th. But what we're going to do is we're going to subtract the last paycheck prior to that one. What we want to do is subtract out all the paychecks for the year that came prior to February. In this case, there's only 3 because it's right at the beginning of the year, just the ones in January. We want to subtract those out from the last paycheck. If we made the mistake of starting with the year-to-date for the first paycheck in the period, we would accidentally end up subtracting it. And we don't want to do that. Obviously, that would give us an inaccurate measurement. We would show that the person earned less income than they did. If they were close to the line for qualifying for a Chapter 7, that might actually give us a big problem. So it's important to remember that when you're doing the gap calculation, you use the last paycheck of the 6-month period, but not the first one. You use the one just before the first one to be able to do the gap calculation. Now I'm going to flip back and forth between my pay stubs and my table here. If you have 2 monitors, it's pretty convenient to park the pay stubs on one of the monitors and keep the other monitor or the laptop screen, if that's what you're doing, with the table, and then look at them both at the same time. So first, we start with the last paycheck. That's the one for July 31st. We look at it, we take the year-to-date for the income up to that point, and that's $15,063. So we come here, and we type in $15,063. We could add the pennies if you want. It doesn't make a difference. I sometimes do, I sometimes don't. But I will put the date here, 7/31, and fill that in. And while I'm at it, I'll type in the date for the initial check, which is the last date, or the last paycheck in January. So there we've got the income. You can see it automatically filled in 15,000 below. The reason is that this cell here, what it does is it takes the last paycheck and it subtracts the first paycheck, which obviously gives us the difference and gives us the amount that was earned during that 6-month period. Since we don't have the first paycheck entered in yet, it just gives us whatever the amount was in the last paycheck. Later, when we look ahead, you can see that this row here gives you the average for the 6-month period. It could be less than 6 months. Suppose we only had 4 months of paychecks. We would enter 4 here, and it would give us a different average. In this case, we have the full 6, so we'll go with that. So from there, we proceed to enter the deductions on the paychecks. And here we have 631 for federal withholding. We'll type that in, 631. Social Security, you see it down here. We've got 933 and 94. For Medicare, we've got 218 and 42. And for L&I, we've got a total of $209.37. $209.37. We filled in our first check. Let's turn to the second check. We go up top, find the last paycheck in January. The year-to-date was 2,220. Let's type that in. Now you can see there's been a change. Instead of showing 15,000 like it did before, now it shows 12,800. What it's doing is it's doing the subtraction. It's taking the income, subtracting the income at the beginning of the period, and giving us the gap. And that's how we did the calculation. In order to make this go quickly, let me just jump ahead. I've filled in the remaining cells, and you can see now that we have a full calculation of the gap for the income, the gap for the deductions by category. Our next row down gives us the average for 6 months. And so we've calculated what we need to calculate. Before we leave, there's an important step. We have to write down what the calculation is, because when we come back a couple of months from now, we won't know exactly what we were doing, and this helps keep it straight. So write the name of the company, then write down the period that we're calculating on, which is year-to-date, February through July, in this case 2014. Now, it's important to have the name here because this helps keep things straight elsewhere on the spreadsheet. Why don't we jump to that now? All this information is going to be piped over to the debtors monthly income table. And you can see there's the name that we just typed. This is really useful because sometimes you have more than one gap calculator, and when you're not looking at it on the gap calculator page, it can be very confusing. So the name helps keep things straight. We're almost near the end of the process, but we have to connect up a few cells so that the whole rest of the spreadsheet works. These things aren't pre-connected because we never know exactly how we're going to be doing the calculation. We get cases where the debtor has several jobs, where they have several sources of income, where one source is based on pay stubs, another source might be that they have a business that they work on the weekends, so they've got no pay stubs, but they do have deposits into their bank. And then we're doing a combination of looking at what's in the pay stubs and what's being deposited in the bank. And so we basically have to take each case individually and figure out, how to input the raw data and then connect it up in the most appropriate manner. In this case, this is a fairly simple situation. So what we do is we take the month's total and we connect it up to the gap calculator down here. That's easily done. You type an equal sign into the cell, and then you click on the one that you want to link it to, and that connects the two. You do the same with the deductions. Type an equal sign, drop down here, and connect it to the right cell. A shortcut, you could go and do each one individually, but you can also take the first one you did and you drag the lower, you can see there's a little square in the lower right-hand corner of the cell. When you've selected, if you just drag that cell, assuming I can figure out how to grab it, and it fills in the other ones in the same way. In other words, this one jumped down to this cell below it, so it makes this one here jump down to the same cell in the next column over. And so that gets it filled in a little more quickly. The last thing we need to do is, he's not making $12,000 a month. We need to set the 6 months that we're using to divide. And so now we've got it looking more accurate. Now all of this info, now that we've connected everything up, this is automatically already pre-connected to our Schedule I sheet. And there it is. You see the info. It's typed in to this summary up here. It's also typed in to this more detailed breakdown below, where you can see, whereas up here you only see the total of the taxes, down here you see the same figure but broken down by the categories. Now, if we would have filled out every part of it. Let's say this guy's name is Adam. On Schedule I, it's filled in here as well. If he's married, then the spouse is filled in here. Source 3 is from the other tab, which we looked at in the overview when we looked at the example of someone getting DSOs. Let's just say, for the sake of argument, that Adam's married to Eve, I guess, and so we typed in $335 in child support that she was receiving from her ex. We go back. Now it's included in the calculation as well. Just to make things neat, we'll put her name in there as well. And in order to keep things straight, sometimes we might add some notes here. For example, if, let's say, the child support was kind of sporadic, we might make a note that child support is sporadic, meaning it might actually be less than 335 average, but for the sake of calculation at least, we're considering that they get the full amount that they're supposed to get each month. That's our income calculation. This summary up here has added up everything, and we get a gross for the couple. Down here we get the net. This column here, or this cell here rather, takes the income, subtracts out the deductions, then it adds it across to here, and you get the monthly income for the couple. The last step is very important because it's absolutely guaranteed that after a couple of weeks we come back and we don't remember exactly how we did the calculation. And in a simple case like this, that may not be much of a problem, but oftentimes we're making some kind of complicated calculations with two debtors, and maybe each of them has more than one source of income. So it's important to write down a description of how we came to the calculation that we had. In this case, it's simple. Income is based on GAAP calculation for Feb through July 2014. Might make another note that we're assuming might be important to keep in mind that the child support figure is a little bit weak. It might be overestimating, and so make a note to that effect as well. And that's how you do the GAAP calculation. On the next video, we'll look at how you do a calculation when it's less straightforward, when you have to enter in, say, deposits in a bank statement, or when you have an irregular set of pay stubs, or have to otherwise use these tables where you enter in row by row every